So Scott and I are going to talk about some different real estate business models. But before we do, how's the grocery business going?
It's okay. We had a good Easter week, about the same as business was about the same as last year, um, which is probably trending with the banner average, I guess. Still a bit of a grind. I was talking to a realtor I know in Toronto who's selling a lot of property in Calgary, and he's got a client who owns a bunch of Shoppers Drug Marts who's actually attempting to do the same thing that a few of us are in terms of just diversifying and buying more real estate and trying to get out of the retail game.
Yeah, I mean, uh, I wish there was an easy solution for all of us, we could just, plant some money trees in our backyard and
Yeah.
yeah. Did you ever see the movie Happy Gilmore?
Yeah, I've seen that a few times.
Yeah, it's a cute movie. Do you remember Happy Gilmore's Happy Place?
Yeah, I do.
There was the midget, there
Yeah,
was a
yeah,
beautiful woman in lingerie, there was beer, I think there
yeah,
might be golf,
yeah,
I mean, the only thing you needed to complete that, and maybe it was in that scene, I don't remember, was the money tree.
right. Yeah,
So
no, I
most of
remember
us
that.
have,
It's a great
most of
movie.
us have the same dream. One of my coaching clients in Idaho and California just sold one of his sand pits. He owns a number of sand and gravel pits. And
Yeah,
after paying all of his dad and whatever else he might owe on the property, he'll be left with about 4 million US dollars.
yeah,
And he, which is, it's not an infinite amount of money, but it's better than $400,000. And he asked me what should he do with the money, and he's thinking about more real estate investing, maybe another sand and gravel pit. He owns some retail plazas, and we've gone through a lot of the same stuff that we're going to go through today. But I said, I also have a coaching client, who's a member of the armed forces in the United States, who bought Bitcoin at I think 11 or $12,000 and wrote it up to 60 or $70,000. This is a few years ago. And
yeah,
I begged him to sell half of it at, I think at 65,000. And he said, oh no, it's going to 100,000. Of course, it went back down to like 14,000, right?
yeah,
Um,
yeah,
so I said to Ryan, he's a bit younger than you. I said, Ryan, why don't you take $2 million dollars of that, half of it, and put it in something very safe, right? Real estate can go up, but it can also go down. And there's no easy business. If you bought a grocery business, I don't have to tell you, it's a lot of work.
yeah.
So then he asked me, well, what safe investments what could I do with that 2 million that would be safe and easy to manage? And it's not that easy to find a solution to that. I mean, you could put it in a treasury bill in the States, I suppose, and get whatever, 3 or 4%, maybe a
Yeah.
bit more, which wouldn't be the worst thing to do. But, those interest rates will go down too if the general economy allows it.
Yeah.
I was going to ask you if you had 2 million US dollars and you wanted to do something safe with it, what would you do with it?
You know what? I would probably invest it. Like I would throw it into a GIC, and then whether it was short term or whatever, and I would just find something that was almost, I don't know, recession proof to a certain extent, I guess.
Yeah,
I
and
don't know. I think it depends on what stage of your life you're in. If I was solely relying on those funds to fund me through retirement, I would pick something pretty safe, even if it was 3-4%. I'd be okay with that.
okay. I think that's good advice. One of the things he asked me about is that he might invest in a mortgage investment corporation. There's a mix around that have a long track record of success, and instead of making 3 or 4, maybe even 5%, he can probably make 8%.
Yeah,
But there's risk with that, right?
right. Or
So
I guess you could lend your money out,
yeah,
but like you said, that's risky. But you could definitely make, I think, 8 to 10%.
yeah. I thought of that too, self-directed, well, it's not a self-directed RRSP in the United States, it's a self-directed 401k.
Right.
So, but in Canada, it'd be self-directed RRSP. I've got quite a few of my clients in Canada who do that self-directed RRSP lending. They like doing it. And
Yeah, it seems pretty, even rent to own.
yeah, it's a possibility.
Is some easy cash in your jeans, I think, right now.
Yeah.
Not easy. I mean, like there's obviously risk to it, but I know a lot of people are doing it for, 500 to $1,000 a month type thing.
Yeah, no, I get that. Oh, okay, well, listen, I'll talk to him about it. So, I thought it'd be useful to show you a couple of business models, just to, it's still a mystery to me. And I've asked quite a few people, by the way, about Port Hope, and it's still a mystery to me as to why Port Hope has such high residential, prices. That 3-bedroom bungalow that you put a bid in, it was over ask, they were asking 749 for it, 749,000. Your bid went in at, I think, 751,500, so
Right.
slightly over ask. And you lost out to a bid for 780,000. It was a 3-bedroom bungalow, it was a nice bungalow, and it had a 1-bedroom lower level apartment, but it wasn't really something, at least in my opinion, that was worth $750,000.
It wasn't. I mean, it was in a pretty decent location, and I was super disappointed when we lost out, especially considering we did the 751.5 bid.
Yeah.
I thought the fives for sure were gonna secure that
I
that.
guess I screwed up, Scott. But and I thought the sympathy letter was that you and I worked on was probably useful too. But we were just too far away. Like if you had been 751 500, and the other guy might have been 753. They might have chosen. If it's a $2,000 or $3,000 difference, they might have chosen your. But it was almost 30 grand.
I'd bet on that all day long. Again, I thought it was a sure lock. Uh, I thought for sure we were going to get it. I'm kind of like that. Whoever got it, I mean, they loved it. It was the only bid at the time. They were the first party in, and they went like 31,000 over asking or something. Like
Yeah,
it was
31,000.
crazy. Yeah, like it was beyond like an aggressive offer. It was kind of silly.
Well, I listen. I don't understand Port Hope. This is not to dump on Port Hope, but people I've talked to who know the area really well say, well, it's a decent town, but I like Coburg better. I said, oh, you like Coburg better than Port Hope? Yeah, and Port Hope, glows at night due to the radioactivity. I mean, there's some kind of magic going on in Port Hope, where everybody is drinking the Kool-Aid. I mean,
Wow.
I can't believe that a bungalow, 3-bedroom bungalow, even with a decent 1-bedroom apartment in the basement, is worth almost $800,000.
I, you know what? I'm biased, obviously. I mean, we don't call Coburg, we call it Greaserville.
What do you
So
call it?
Greaserville.
Okay, I
But
guess
no,
that's an insult, right?
it is, yeah. No, I mean we're pretty close. We're about 5 minutes apart basically.
Yeah,
We've always had this rivalry, but Port Hope has a certain, I think, charm to it. I mean, Coburg's downtown is absolutely humongous, and it's has a lot of vacancy.
yeah,
Port Hope has, in my opinion, almost the perfect size downtown core where vacancy never peaks above a certain level because there's only so many storefronts on it.
yeah,
We have really strong restaurant scene,
right.
where we draw a lot of foot traffic, a lot of people from surrounding areas. We've got the Capitol Theater.
Yep.
It's a draw. Um, I don't know. Port Hope's always had a charm to it. I mean, it. I couldn't tell you what it is. On a different front, it's actually the from what I've been told, and I think it was in an article in the Toronto Star, it's the gay capital of Ontario.
I didn't know that.
Yeah,
That would support prices because, as you know, gay couples by and large don't have children, right? And
right.
I have a coaching client. He and his life partner are gay.
Yeah,
they have tons of money. They have no kids, and they dress nice. They go to nice restaurants. They go on nice holidays.
They spend lots of money.
They do,
Yeah.
and they have a townhouse. It's a nice townhouse in Toronto. It's a 4-bedroom townhouse valued at $2.7 million. No mortgage against it, right? I mean,
Yeah.
so they've done pretty well, and super super nice people.
Yeah.
And so and they live in an area in Toronto apparently that is quite a lot of gay people live there. So
Yeah.
I didn't know that about Port Hope because thank you for telling me that because that
Yeah.
is that could definitely change the scene. Like if whoever the buyers are, if it's a gay couple, paying $30,000 or $31,000 over ask might not be a big deal to them.
Right, and it's a community, and I think it's obviously quite a large one, and it's a comfortable area for them. I shouldn't say for them, that sounds terrible, but you know what I mean.
Yeah, yeah. Look, I don't care. I don't care about people. I only divide the world into two categories. I may have told you this already, Scott. People you like and trust, and people you don't like and don't trust.
Yeah,
I don't care if they're white or they're black or they're Asian or what their religion is. I don't care about any of that. I do
yeah,
care if they're trustable or not. That's the only thing that counts to me. Can you
yeah.
trust? But gay capital of Ontario, that does explain a lot. And thank you for sharing that. I mean, it's been really bothering me. I mean, I've been thinking about it, and I'm trying to figure out, how in the world it is. So for somebody like yourself, the only way to justify investing in Port Hope, there's, I think, two primary factors. One, you live there, so it's close, and that's
Yeah.
that's important. That's not nothing. That's number one. And number two is maybe if it is the gay capital of Ontario, you might get somewhat higher rents to offset higher purchase prices. I don't know if that's true.
I think it's partly true. I mean, I think the rents here are pretty high.
Mhm.
Um, I think they're higher than they are in Coburg, but I can't say for certain. Um, but yeah, house prices in Coburg are less than they are in Port Hope. I don't know.
All right.
It's
So listen, today I think what we'll do, Scott, is you should keep up the search in the two main areas where you're active. One is, of course, Port Hope, and the other is Peterborough, right?
Yeah,
So, and one of the things about yours truly is I am not easily discouraged. Like I'm like a beaver. Or like a pit bull. I get my teeth into something, I stick with it.
yeah.
And and I think you are too. So, if maybe we have to put in 20 offers. Poor Jeff Moody. Maybe we have to put in 20 offers to find the right one. But you should look, I think, in those two markets, Peterborough and Port Hope.
Okay. Well, you know what? I was thinking this morning about it a little bit, and in terms of, how do you gauge success? And I think it's important to note that um, it's not necessarily related to the purchase of a property. It's as much related to the fact that you're not sitting still and you're actually placing bids on property. So even if, say, 6 months transpire and I'm still yet to find that property, but I've put in 5 or 6 bids, I think that's a success in itself.
No, I don't disagree with that. And one of the most important things about really any human endeavor is something called pattern recognition. Let's say you were a chess master. People say, oh, chess masters, they think 6, 8, 10 moves ahead. No, they don't. Nobody can think in chess 6, 8, 10 moves ahead. There's just too many alternatives. There's no
Yeah,
way. But
yeah,
what chess masters do is they see patterns on the board and they say, oh, if I do this kind of a thing, I'm going to beat Bruce handily in this match, right?
yeah.
So it's the same thing in real estate. It's the same thing in pretty much everything that we do. It's pattern recognition. So the more offers you put in, the more properties you see, the more patterns you will start to recognize in the marketplace, and the better your decision making will become. As a general rule, that is true.
Yeah.
So if we spend 6 months fiddling around, we are actually making progress. In the Japanese art of the fighting art of Aikido, they teach that as you're learning to fight, you reach plateaus, right? Where you don't seem to be making any progress. And then somehow you break through that plateau, but you get to another one. And there's no end to it, right? There's always another mountain to climb. There's always another plateau. And so for most North Americans, we get frustrated when we're on the plateau because, oh, we're not making any progress. But what you just said, Scott, tells me you understand the concept of the Japanese Japanese Aikido, because they think that on the plateau, as you're doing whatever it is you're doing, whether it's training for fight or it's trying to buy some additional real estate, they think that that plateau is where you're setting the stage for future growth. And I just heard you say basically the same thing. So I like that. So one of the models I wanted to talk to you about is probably one of my favorite models, and it's about industrial real estate. I like industrial, maybe even better than residential. I like residential real estate, but the main types of real estate, you've got residential rentals, you've got commercial retail, plazas, you've got office space, you've got industrial space, and you've got institutional, right? There are really 5 types. And then you've got recreational, and you've got agricultural, et cetera. So there's, I don't know, 7 or 8 different types of real estate you could get involved with. But probably my favorite is industrial. I used to build industrial condos back in the day. You know what those are, right?
Yeah, condos built within industrial buildings, like in warehouses type thing.
Yeah, just hang on a second. I'm
assuming like abandoned factories, storage facilities, stuff like that.
Well, I'll show you what a typical industrial condo kind of looks like. Yeah, here's one. I have a client in just north of Toronto who builds these. And so this would be, sorry, a second here. This would be a typical, and I used to build them myself, and I loved that business. So this would be a typical industrial condo, where you've got some decent, frontage, but you can sort of see in the back here, you have loading bays. Can you see that?
Yeah.
So this is kind of a U-shaped building. It's quite creative, I think. In the front, you would have your showroom, you would have your office space, and then in the back, you'd have some kind of a warehouse function, right? So let's say you and I ran a survey company, or we ran a heating, ventilation, and air conditioning company. We're plumbers. I mean, there's an infinite number of, small businesses, medium-sized businesses that really like the industrial condo. And the reason for that is that they can own it, right?
Mm-hmm.
So this is a condo building, and probably each one of these bays it's just like a residential condo, only it's industrial, and each one of these bays would be sold separately.
Right.
So, you and I, if we were, a group of surveyors, maybe we couldn't afford to have our own building of, 10,000 square feet, but we could probably buy an industrial condo, and we have 10,000 square feet that we own. So when we're ready to retire, we have a number of alternatives. We can sell the survey practice to another survey group and keep the real estate. We can sell the real estate and keep the survey company, or we can sell them both. So it gives you, because a lot of, like a consulting business, my coaching business after I quit or pass away, whichever comes first, isn't really worth very much, right? Who would value my coaching practice? Really, no one. It has value to me, it has value to my clients, but it doesn't really have any residual value. So if I owned an industrial condo and I was coaching out of my industrial condo, when I was ready to retire, I could sell the industrial condo or just rent it to somebody else and keep the income. All right.
Yeah.
But here's what one of my clients did, and I'll show you this one here. And if you've seen some of this before, you got to tell me, because I won't, I got just over 2,500 clients, so I may not remember if I'm repeating myself. But this is a client of mine in Waterloo. And his first name is Shaddy. His last name is Fahal. And I like his first name, so we call this model the Shaddilac, after the Cadillac.
Mm-hmm.
His first name Shaddy, and we just call it, just for the hell of it, we call it the Shaddilac model. And so this is a building. So when I started coaching him, this would have been right in the middle of the pandemic when real estate prices were insanely high. And there was this one building in Waterloo. I don't know if you can see it on the screen here. There's this
Yeah.
one building in Waterloo, which was 80,000 square feet, which is a fair size.
Yeah.
We're not talking about, Nevada, where you have industrial buildings that are 3 or 4 million square feet. You've got fulfillment centers, in Nevada that are so huge. They actually have planes, cargo planes land. They drive them into the building, they load them up, they go out the other side, and they fly out. And so 80,000 square feet in a place like Waterloo, certainly in Port Hope, in Ottawa would be a big deal. In Toronto, it'd be fairly small. In Nevada, it would be invisibly small, right?
Yeah.
Nevada's the #1, I think, state for fulfillment. But anyway, so this was for sale, 80,000 square feet of industrial space on a site that you can see, your long, skinny site here. It was for sale for $1.2 million.
And
And
that's a good price?
oh my God, 80,000 square feet. You think about that, $1.2 million. Hang on. 1.2 million divided by 80,000 square feet is equivalent of $15 a square foot. Scott,
And I guess it was in good shape?
well, we're gonna talk about that. What
Oh, okay.
can you buy? What can you build for $15 a square foot today?
Nothing.
Nothing. You can't even build a doghouse for that. Trust me,
Yeah.
you cannot. So Shaddy said, well, I don't know. I kind of like this building, but I'm not sure what to do with it. Now, I'll show you why it was for sale at a very low price here. This is a photograph inside. And what you're seeing is a long, skinny building that has, I think, 10'2" or 11'2" ceiling height. And that is not adequate certainly not for Wayfair or Amazon or any of the big fulfillment companies. They want ceiling heights of at least 35 feet, and some Amazon buildings are 60 feet. And I hear that Wayfair might build 90-foot high warehouse because they work in 3 dimensions, right?
Yeah.
They have robots, and there's not a man on a stepladder going up 30 or 40 or 50 feet to get a book for Scott or Bruce, or a pair of socks. They have robots doing it. So they work in a vertical space. So what industrial companies want, and fulfillment companies want, is they want high ceiling heights, and they want it to be column free. This is the opposite of that.
Yeah.
This is the opposite of that. Soon as Shaddy showed me this, I said, Shaddy, this is a gold mine. He said, what do you mean? I said, this is a fantastic buy. He said, look, I could buy it. I mean, he's a well-to-do young man, and he could just buy it. He could just pay cash, which he eventually did, of course. But, why would you buy a building to keep it vacant? Right? Because you cannot rent an 80,000 square foot long, skinny building, low ceiling height with all these barriers that you see here, all these columns running down the middle. You cannot rent it to somebody who wants 80,000 square feet or 40,000, but it is perfect for small workshops. So what I said to Shaddy is, by that time we had been working, I think, for at least 6 or 8 years now, probably more than 10, on this small workshop model, which is something I do myself personally, and it's probably the most successful of my real estate investments. I have a small building. It's not very big. It's like 4,500 square feet. Has, I think, 8 workshops in it that produces more income than just about anything else I do. So it's perfectly set up for these small workshops, and there's an infinite number of gigpreneurs out there, right? There's an infinite number of them. And so this is just Shaddy sketching it. So this is what he did. He was just hand sketching it. And you can see this is a floor plan, and you can see he was going to divide it up like that. Most of these spaces, I think, are 400, 800, 1,200, and 1,600 square feet. And the thing about the small workshops is they don't need, and they don't want 30-foot ceiling heights. They don't. If you're running a survey company, you're not stacking your survey equipment 30 feet high. Something that's only a 10-foot or 11-foot warehouse is perfectly fine for your survey equipment. So he bought it, and the week after he bought it, in there he was, with steel studs and dividing this thing up into these bays. That's just another shot. I don't know why that's there. And you can see this is him under construction. Here's a couple more shots. So here are the numbers and it's been a phenomenal success. He bought the building for 1.2 million, $15 per square foot. Putting in all these workshops cost him almost 900 grand. He had some engineering costs, some financing fees. He paid some interest, had some contingency allowance. So he ended up with about $2.3 million in this project. But his net operating income was just out of sight. The demand, as fast as he could build these small workshops, he could fill them. And he ended up with a cap rate, stupidly high cap rate, over 50%, which is really, I mean, if you and I could buy a house in Port Hope for $750,000 and we had a 50% cap rate, it means that every 2 years we get the price of the house back.
Yeah.
That's damn good. So so I said to him once he had filled it up, I said, I think it's worth over 14 million bucks. And you know how I value it, right? You know, if you've got this kind of net operating income and you can get an appraiser to give you an 8.5% cap rate, you've got something worth 14 million bucks. So, but what he did instead was he put in a mortgage of just over 9 million. It was still cash flowing at 9 million. And don't forget, he did it before interest rates went crazy, right? So his mortgage is, probably 4% or 4.5%, not 7%. So if he has to renew it at 7%, it'll obviously reduce his cash flow. But he pulled out about $7 million in tax-free cash within 3 years.
That's crazy.
It was unbelievable. And he sends me a nice note once a year. Thanks, Bruce.
That's 1 in a million, though. That's like, that stuff just never comes around.
I'm not sure about that, Scott, though. I mean, it is definitely exceptional. I'm not saying that every time you can do that, but I'll show you another one, which is, it doesn't have the same kind of cap rate, but, is also very successful. So that one was Shaddy. I think that is exceptional, but let me show you another one. And this is another one of these industrial things. And there's probably a couple others I could find in my files here. So this is actually in Ottawa. It's in Canada. You know where Canada is, I think.
Yeah.
And I'm just gonna get out of this. Hang on. All right. I'll just go to Google Maps just so you can see it. So this is a building in Canada, but it's literally in the middle of nowhere. I mean, if you can see it, here's the building that my clients bought, and it's on Akins Road, but it's literally just surrounded by fields. I'll show you that. So this is the building that the boys bought. They're all about your age, I think. So, oh yeah, you can even see my sign is up there.
Yeah.
So this is about a 17 or 18,000 square foot warehouse, and very similar to the one that Shaddy bought. It's substandard in the sense that it has, I think this one has only 10-foot to ceiling height. So again, it was completely empty. It had 2 coverall buildings, and you can sort of see in the back here, there's an old farmhouse on it. But if I pan around a little bit, you can see that there's virtually nothing around it. It's a gravel road, just farm fields as far as the eye can see, basically. All right, just I'll pan around. All right, and then we come back here. And again, these were the first guys that tried the small workshop model. And so we'll go back here. So this thing was for sale, and it was being sold by an HVAC company called Modern Niagara. I don't know if you would know them, but they're pretty big in Eastern Ontario. They probably do today $300 or $400 million a year. Anyway, so this was where Modern Niagara actually got their start. and they had abandoned this and built a beautiful new building, much, much, much bigger. And it had been for sale for about a year. So days on market were, 300 plus days. And I called up three of my clients, Chris and Warren and one other guy, and I said, you ought to buy this. And we went and had a look at it. They said, well, what would we do with it? And I talked about the small workshop idea. And so they did buy it, and I'll tell you the story behind that. And they divided up the warehouse into spaces that are as small as 400 square feet, which you can see on the right here. This one is a tech prototyping company. That's probably about 1,200 square feet. This is one of the owners here, Warren, in the building. They added some more overhead doors to provide good access. So you can see the width of these corridors are big enough so you could bring your forklift and materials in. And of course, they've got plywood on the walls. Here's another small workshop here. So this is kind of the summary. They were asking $990 for it back in 2016. It had been over 300 days on the market. Substandard ceiling height, obviously not the best location. It was, probably 10 or 15 minutes from, major residential and commercial development. There was no definitive business model associated with this, but we had a plan, and the plan was to do micro workshops and renovate the farmhouse. So anyway, we put in an offer of $250,000 for it, and the president of Modern Agri basically kicked me out of his office. He said, that's ridiculous. We're asking $990. It's 2 acres and it has some nice buildings on it, even if they are a little bit run down. But they didn't sell it, and I went back a few months later, offered the same amount of money on behalf of my clients, and eventually I said to the president of the company, it's just, you have to pay the property taxes on it, and you have to repair it and maintain it. You have to watch out for the vandals. You should just get rid of it. I mean, you're a huge company, just dump it. And eventually he agreed to sell it to them. And so what they did was they bought it for 250 grand. The warehouse is just under 18,000 square feet, which was divided up into a bunch of workshops. They had those 2 Quonset huts or coverall buildings that you saw, and the farmhouse. So there was the purchase price, their land transfer tax, some legal costs, and there were their rentals to the main building and to the farmhouse. So they were in for about $850,000 on this project. And they did very well on the small maker spaces or workshops. They rented the farmhouse. That was to an environmental company. I rented the first Quonset hut or coverall building to a company that does road chemicals, and the other one was to a lawn maintenance company. So they ended up with a cap rate over 30% on this one, which was really good. And the building is now valued about $4 million. So it's not, these do actually exist, and what you're looking for. I mean, if you like the model, what you're looking for is you're looking for an old industrial building that no one else wants, that you could, you could turn into a model that has, things like the micro workshops.
Right. Okay.
I'll show you another one too. I just thinking of it when I was running on my treadmill this morning. I'll show you one I just finished doing in Texas for a client of mine, young fellow. Let's see if I can find it.
Texas is blowing up right now with self-storage, isn't it?
Blowing up in a good way.
Yeah.
Let me see if I can find it. It's here.
Seems like there's a lot of players out there trying to solicit or raise funds to partner up with developers.
No, for sure. Yeah, let me just see if I can.
But it seems like they want to get rich off of your dime. So
Well,
they want you to buy in at 100,000 and they promise great returns, and then,
yeah,
Yeah.
if it's real or not, right?
Yeah.
Let me see if I can find it. Give me 1 second. Normally I have these things set up before we start. Maybe this will be it. Yeah. All right, this will do. So a client of mine has just purchased in Abilene, Texas. Do you know the film Friday Night Lights?
Yeah.
It was also a television series. Did you ever see any of it?
Yeah, with the fellow that used to be married to Jolie. Billy Bob Thornton, wasn't
Yeah,
it?
Billy Bob Thornton. He did
Yeah.
the film, and then they made a television series out of it. And I actually think the television series was even better.
Yeah.
Anyway, so this is Abilene, Texas, and this is about a 5 acre site here. It's zoned industrial, and it has municipal water and sewer right to the property line, which is fantastic. It has a building here. I think it's about 3,000 square feet. It's an old warehouse. And what my client is doing is he's going to divide it up into 46 small contractor yards. And you know the contractor yards model, I think,
Yeah.
right? So, and let me see if I've got a few. I think I have a spreadsheet that'll explain it a little bit better, what he's doing. Yeah, here it is. I like the name Abilene. So this is the spreadsheet that we put together on this thing. So he bought, listen to this, he bought 5 acres of industrial land in Abilene, Texas, with a 3,000 square foot warehouse or old office warehouse building for 460,000. These are US dollars, right?
Mhm.
Still pretty good price, I think. And let's see, yeah. So the warehouse is about 3,100 or 3,200 square feet. Then there's a small office of about 800 square feet. It's a decent population size. Abilene is about 125,000 people. A median income is average, maybe even a little below average at 55,000. There's the land area in square feet, 225,000. You'll probably get about 19 cents per square foot per month for his contractor yards. And so he'll probably, when this thing is mature, end up with about 30 or 31,000 US dollars a month from this site. He'll get a little bit of money for the warehouse. He'll get a little bit more money for the office space. And then he has some, sea cans and other things that he'll rent or sell. So he's looking at a net operating income probably of about $25,000 a month, probably 3 years out, which will give him about 300 or maybe even $310,000 a year in net operating income. That values the property with, I think it's a 7.5% cap rate at about $4 million. And his total cost to build out, renovate the warehouse and the office, build out the contractor yards, put in, the video equipment he needs and the security and the gates, the automatic gates. It's about $807,000 of construction costs, $15,000 in professional fees. He's got a big budget for grand opening and marketing. He's got his working capital here, miscellaneous fees. I'm not even sure what those are. He's going to put some sea cans on the site. He bought a franchise from another client of mine based in Florida for a Long Yards. That's a Long Yards franchise that he bought, Long Yards. Then he has to pay some fees. He's financing this through the Small Business Administration, which will finance 90% of his construction. So, it's a pretty good investment. It has a gross rent multiplier. You know what that is, right? A gross rent multiplier is the property price or the current market value divided by the gross rental income. And most of these lenders are looking for, gross rent multipliers of between 4 and 5. In his case, he's under 4, which is very good. So about 3.8. And his going in cap rate will be about 18%. So he's hoping to turn, something that'll eventually cost him, 1.6 million into something that'll be worth over 4 million. And I
Right.
think he can do that in 3 years.
Okay.
So it's not just, it's not just, a pipe dream. I mean, the first one that I showed you, I understand your criticism was that was an exceptional deal, but there are good deals out there if you know where to look for them.
Yeah, no, they're unicorns.
Yeah. We've talked about this before, you and I. Unfortunately, to find the right deal, it's really on you to do that.
Yeah.
Like I wish I could tell you that Jeff has time to do it or your coach has time to do it, but the person who's going to find these, the unicorns or whatever is you. I mean, think about this, Scott. If you and I worked for a venture capital firm in California, there's a lot of competition for deals, between the VCs.
Mm-hmm.
And, if we're, executives in a firm, we're supposed to find the next Uber, we're supposed to find, the next whatever, the next Amazon, I suppose. And there's a lot of competition for these deals. So a big part of being a good real estate investor is being able to do the research.
Yeah. Okay, well, I'll keep on pounding the pavement.
Well, one of the things I try and do in my coaching practice is I try and, expose the people I coach to different models. And it often happens that you're driving down, the backwoods road somewhere near Port Hope or near Peterborough, and you see a for sale sign somewhere, and then there's a house in front, and in back you see a ginormous, warehouse.
Yeah.
There's no back road, rural road in Ontario or North Dakota, Minnesota, Illinois. There's no road in North Carolina that you drive down that you will not find mom and pop living here, and they've got kitchen cabinet making, place in behind, right? There's no place anywhere in North America where you cannot find those. And that's what I would look for.
Yeah.
If you think about what we found on Akins Road, it was exactly that. It was the old farmhouse. It was the reversal. Instead of the farmhouse being in front and the warehouse in behind, the warehouse was in front and the farmhouse was in behind, right? But it's the same, right? And that I mean, if you're interested in this model, that is something to look for.
No, I am, and since we began this journey, it's opened my eyes quite a bit. I mean, I'm not looking for a house to rent. I'm looking really for a property that can deliver multiple streams of revenue.
Yeah, exactly. And, look, had we been successful, purchasing that 3-bedroom bungalow in Port Hope with an above asking offer, you and I would have worked our asses off to maybe get the cap rate to 6 or 7%, right?
Yeah.
We would have worked hard. And I have no doubt that you would be successful. And if you got a 7% cap rate on the damn thing, as long as interest rates come down sometime in the next 2 or 3 years to maybe 3 or 4%, it'll look fine. So there's nothing wrong with a 7% cap rate if interest rates are not 7 or 8%, if they're back down to 3 or 4 or less. But even if they just go back to say 3 or 4% in 2 or 3 years, a 7% cap rate is perfectly fine. But it'll take you 20 years to make serious money from that property, right? I mean, assuming that you have some kind of a mortgage on it. If you don't, it's obviously going to produce 7%, right?
Yeah. Yeah.
Which is not the worst thing that ever happened to Scott. But
no, but I'm not young anymore. So it's one of those things where you got to find those properties that make sense when you're 49.
Exactly. And I'm 72. So I mean, I will not buy any more properties that have a, 5 or 5.5% cap rate, 6 or even 7% cap rate. I'm too old.
Yeah.
I got you by a bunch of years. I'm 72. So, when I look at it, I have a few investments I've made recently that, have like, 12%, 11, 12% cap rate, which is not bad. and a few that are 14%, and again, not bad. But there's no way at this age, I wouldn't be doing my kids or grandkids a favor if I bought a house and made a 5.5% cap rate.
Yeah, yeah.
And,
You could pass it on, it's just basically a liability.
yeah, unfortunately, it would be,
Yeah.
because, interest rates or whatever they are. Although you're doing better on interest rates than most of my clients. You're getting into the 5 range instead of the 7 range. So a 7% cap rate even now would probably be okay for you.
Yeah, I kind of want to wait it out on that one that we were talking about where it was 7.65.
Yeah, that was good.
I kind of just want to just leave it and see what happens in the next 6 months, because I feel like it's going to get better again.
Yeah, I what makes you think that?
Well, I'm seeing quite a bit of deflation in the grocery business.
Really?
And I'm not sure if that's because we're losing market share or if that's just a general trend. But I feel like we're running out of money. There's more and more delinquencies. There's things happening in the marketplace. I don't know. It's like everyone else, I'm guessing.
Yeah, yeah. I mean, I think we all are. Any economist or coach or whatever banker tells you that he or she knows what the interest rates are going to look like in 2 years. No, there's no way. I mean, we don't know. One of my coaching class, a young person, very successful, told me seriously that he thinks that within 3 years, all humans will die. Within 3 years. And I said,
Yeah.
God, Michael, why? And he said, well, he thinks artificial intelligence is going to wipe out the human population. I mean, he's a young man. He's been watching too many Terminator movies. But in all seriousness, he thinks that AI is a true menace. I mean, Elon Musk is the same, right? He's been saying artificial intelligence could be the end of humanity. I don't agree with that, but I understand there's concern. But I
Yeah,
mean,
yeah, I agree. Hey, Bruce, if here's a question for you.
Sure.
Where would you park funds right now? If
Well,
you
I
had
was actually asking you that half an hour ago.
I know, but I want your opinion on it. Like, because if say you just had, say, 50K laying around and you just thought, okay, well, I'm going to diversify a little bit. You got your real estate, you got your money in stocks, and you've got this and that. I've invested a little bit with a company called Equiton, and it seems like it's doing okay. It's hands off, which is nice sometimes. It's a passive investment. It's an apartment REIT. I don't know, like, what do you do with funds that you don't necessarily want to push into real estate?
So I have not been a very successful investor in anything other than real estate. When I was in LA in the last recession, so it would have been, I think, 2009. I got caught in a traffic jam. I mean, it's Los Angeles, and I got caught behind a pickup truck, and on the back there was a bumper sticker, and the bumper said, "Please God, give me one more real estate um, boom, and this time I promise not to fuck it up." And my wife was with me, and I just burst out laughing. I just uncontrollably funny,
Yeah.
and it summarized for me, and I have somewhere in my files here, it's real estate, stupid. So for a guy like me, I really don't know much, but I know real estate. And um, uh, you know, listen, this is something only you can decide. But for me, all the other investments I've made pretty much have been hopeless, with a few exceptions. I used to own quite a bit of Rogers stock, Rogers Cablevision,
Yeah.
whatever it is, Rogers Communications, they call it now, I guess. And so I owned, I think, probably about 200,000 shares in Rogers. And they were trading, you know, for forever. They went between $1.40 and $1.50. So I had $300,000 or $400,000 worth of shares, you know, in Rogers. And then there was a stock market run up, just kind of random, I guess. And Rogers shares went to $14 and $15. And I had, you know, a couple of 100,000 shares. So when they reached 14 to 15, I started to sell some, and, you know, so I made a few $1,000,000, I guess, on the stock, and that money went into the Senators, and I lost it, right? So, kind of dumb, but that's what I did. I mean, I sold, you know, office buildings and shopping plazas and land and all kinds of things that had value for me, and put it into the hockey team so we could have a hockey team here in Ottawa. And then they went bankrupt, and I lost 55.6 million, as you know, which is why I'm a coach, right? And work for a living. You know, if I had remembered the bumper sticker and I had remembered the little motto, "It's real estate, stupid," I probably, you know, would have made $1 billion on the things I was invested in. Instead, I ended up losing, you know, my shirt. So, you know, for every investment like Rogers that I could name where it was successful, I could probably name 5 other stock market investments or investments in tech companies and other things that I did that were horrible failures. So the reason I asked you the question half an hour ago was, you know, I've got Brian in California and Idaho who's made some money, and he's got $4 million US. What is he going to do with it? I want him to put 2 million into something relatively safe, and the other 2 million he can reinvest in real estate, because he's like me, he likes real estate. But where's that 2 million going to go? Just to depress you a little bit further, a few years ago, I looked at two.
I'm not depressed, Bruce.
No,
I enjoy these sessions.
I hope you do, but I tease a little bit, so don't take it seriously.
Yeah.
I like you too, Scott. I really do. But I did some research on the balance sheet and the income statement of 2 very big companies, Google, now called Alphabet, and Apple. And back then, I think Google had about $100 billion of cash on their balance sheet. And Apple, I think, had even more, like 200 billion, not million, $200 billion of cash. And I said, now those guys at Google and Apple are super, super smart. They must have figured out how to take their cash hoard and make real money at it. And then I looked at their statements, and they were getting, I think, I don't remember which one it was, but one of them was getting 0.7% on their cash hoard, and the other was getting 0.9%. Now, this is before interest rates went up. But think about this. If you and I worked for Google or Apple, and they came to you, Scott, and they came to me and said, "Hey, Scott, Bruce, we've got $100 billion or $200 billion of cash. What should we do with it that's relatively safe and produces a decent return?" Their answer was they couldn't find anything better to do with it than treasury bills, and, you know, that sort of very safe investment that back then was yielding less than 1%. Today would be higher, but still, it's not, you know, it's certainly not of the cap rates that we were looking at in terms of what Shaddy's doing in Waterloo, or Chris and the boys are doing in Ottawa, you know, where they're producing real returns of 30% or more. You know, so it is a wonderful question, and I don't have a good answer. I don't want you to buy Bitcoin. You know, I just don't trust that. I don't want you to buy stocks, because I don't trust that either. And, you know, it's really, really, really hard to know what is the right thing to do. I do coach 2 National Football League players, 2 NFL players. They're both offensive linemen. They make a lot of money. And they last longer than a running back. You know, a running back in the NFL lasts 2 years, maybe 3. It's a terrible sport, really, for that. But the linemen can have careers of 7, 8 years, some of them 10 or 12 years, which is pretty good. And they make, if they're good, and the 2 guys I coach, they make between 11 and 13, 14, 15 million US dollars a year. And, you know, and they're wonderful guys, and they're smart guys, you know, they're both black guys, you know, which I don't care about that. And they're smart guys, you know, they did go to university. And so both of them asked me exactly the same question: what the hell do we do with our money? Because and I don't know if you know this, within 5 years of their playing careers ending, 75% of NFL players are broke.
Yeah, I knew that.
It's incredible. In the NHL, it's about 40 or 50%. So it's terrible in the NHL, but in the NFL, it's much worse. 3/4 of the players are they're loading Pepsis on the back of trucks within 5 years, or they're dead.
Yeah.
It's awful. So these two lads came to me. One of them plays for the Chiefs, and the other one, I think, plays for Baltimore. Anyway, they make lots of money, and they're nice men. Yeah. So what they did, one of them is from South Carolina and the other's from Florida. So what we did was we came up with a very simple model for them. They went back to their hometowns, both of them small towns, and they bought homes there in their own names, not in the company name, because it's too easy to steal a company from a person. Not in their wife's name or their girlfriend's name or their agent's name, in their own personal name. They bought, one of them bought, I think, 60 small homes, and the other probably 50. And they just spun up a bunch of homes, and they rent them out. Yeah. And so now we're talking about buying a home that, you know, is $120,000, right? Yeah. Yeah. Some are like $85,000. So what they were doing, I'll just work it out for you here. So one of them had 60 places, and the average price was probably about $120,000. So they were investing $7.2 million of their cash in these properties, which, when you're making $13 million a year, is not that much, right?
And they bought them with cash?
Cash, no mortgages. Yeah. And this was, you got to remember, this is a very specific client who absolutely has zero time, because if you're playing NFL football, you're either playing or you're preparing to play all year round. Yeah. You get a few days off, but that's it. I mean, it's serious work. Yeah. So they bought $7.2 million property, and he had 60 of these homes, and the rents are not that great. You know, he averages about $10.50 a month on these properties. So he makes it times 60 of them times 12. So he ended up with about $756,000 of gross income. And multiplying that by 0.66, you get about just under $500,000 a year of net operating income. And of course, there's no debt. So that's cash in his jeans. And you divide that by what he paid for the damn things, and he ended up with a cap rate of about 6.5%. Super happy, right? Because that is his pension. That is his pension. And look, when you're making $13 million a year, $500,000 a year of net operating income doesn't sound like very much, but it's a lot better than being one of those hundreds and hundreds and hundreds of NFL players who are broke.
Yeah, absolutely. And you hear it all the time. It's like you said, they either pass away, they get into issues with money, with drugs, they have 2 or 3 failed marriages, kids with each wife. They just,
it's incredible. It's incredible. Yeah. But these two men, if I were to introduce you to them, you would right away see they're clever, they're careful, they're not into drugs, they have a wife, they have children, but they don't have 10 wives, they don't have 10 girlfriends, they don't have a big entourage. They're very careful. So when I first started coaching these guys, they didn't think much of the strategy until they did a little bit more research and worked with me on it. And I said, look, there's 2 things here. One, it's what my dad would have called an iron reserve. You're getting $500,000 a year. And if you think about it, if you have 60 homes and one of them becomes vacant, it's not the end of the world, right?
No, economies of scale. Yeah.
100% occupied to being, I don't know, 98% occupied. And if 4 of them are vacant, you've gone from 100% to 96%, you know, so instead of getting 500,000, you get a little bit less a year. So number one, they understood that it's a very resilient model. Number two, since there's no debt against it and it's in their own personal names, the wife, if she leaves, or, you know, the agent, if there's agents rip these people off all the time, whether it's an agent, an ex-wife, whatever, it's in your name, unless you do something stupid like sign away your rights, it's in your hands for life.
Yeah.
And the other thing is that we hope over, you know, because these are young men, they're in their late 20s now, and your career will last maybe another 2 or 3 years. But when you're 50 or 60, maybe these 60 homes that you own, which you bought for 7.2 million, might be worth 10 or 12 million. And that might be very material to you when you're 60, if you're, because a lot of these players, by the time they're in their 50s or 60s, are crippled.
Mm-hmm.
They have significant medical expenses and they don't live very long. You know, if they live to 70, that's a success, right?
Yeah.
I'm 72. So most NFL players are dying in their 50s and 60s. So I said, this money might be very material, so that if you had to, when you're 60, if you needed money and your portfolio is now worth 10 or $12 million, you could put a $2 million mortgage on it virtually overnight and get $2 million tax-free and pay for some medical expenses or something else, right? So they did understand. It took a while to get them into that space. But, you know, I'm going to talk to Ryan when he gets his check for $4 million US, and that might be something that he could do, you know, where you go into one marketplace. You can't be in 10 marketplaces, it's too hard. But it probably wouldn't be, for example, Port Hope.
Well, it's funny you say that, Bruce, because like I think we overvalue cash as a society, or some of us do. Like I was thinking about that the other day, and I thought, you know, there are days and weeks that go by where I really want to exit the business, and I've kind of, you know, just fed up with it, and I think to myself, what if I just did that? What if I took my cash reserves and bought a couple spots and just lived off of the rent?
So, you know, I don't think that's a bad idea. The problem with Port Hope is that, you know, your cap rates are, you know, are low, relatively speaking, you know, because we know something about animation, would probably be able to get them to maybe 7%, which would be really actually pretty good. But, you know, for somebody like yourself, you know, I'd like you to find a model where you're looking at cap rates of 11, 12, 13, 14%, you know, rather than 5 or 6 or 7%. That's what I'm hoping we can find. But it has to be a model that you're comfortable with, because I've gotten to know you a bit, and you're a very small C conservative guy. And I respect that.
Yeah.
But we got to find a model, I think, that provides you with, you know, a level of risk that you're comfortable with and a level of income that I'm comfortable with.
Yeah. Do you think I'm conservative?
I do.
Yeah.
But I that's not a criticism.
No,
I'm,
no,
I'm
I
the
would say I
opposite end of
am.
the spectrum, and I'm not sure that you know, like if you think about the risks I've taken in my career, they're stupid. I mean, really, you know. So I'm supposed to be a smart person, but I think really I'm not. And you know, I respect you, and I have to tell you, my father-in-law, Ken McMillan, he's long since passed away, but he did not like his son-in-law very much. Ken was an old timer. He never had a house that he owed a dime on. He never had a truck that he owed a dime on. If he couldn't pay cash for something, he didn't buy it. And you know, he thought his son-in-law was you know, basically an idiot. I built a, you know, $500 million empire largely on debt. And of course, he was right. It did unravel. and he wasn't around to say, I told you so, but he's up in heaven. And he's definitely looking down at me saying, I told you so. The other problem with my father-in-law is I ran off with his best asset, his daughter. you know, and so he definitely didn't like me. But you know, I got a kick out of Ken, and you know, and he would give me the gears for sure. You know, he's the only person really as an adult who's kicked my ass around the block a few times. But I didn't mind. I mean, if it had been somebody I didn't know as well, it would have been different. But he was family, and but I respect that. I have another client. Joe Kowalski, who owns Wilderness Tours. I don't know if you know Wilderness Tours.
Yeah, they're whitewater rafting company. Yeah.
In Beachburg.
Yeah.
It's worthwhile telling you that story as well. Joe was originally from Pittsburgh. He's one of my best friends, and he fought in the Vietnam War. And he came back from that war, went back home to Pittsburgh, and he decided that he was going to find some place to live where maybe his sons would not have to fight in a war like that. And you know, that was you know, just a terrible experience. You know, it's unimaginable. I mean, for people like you and me, I don't think you've been to war, and I haven't either. It's hard to imagine what it's like to fight in the jungles of Vietnam for 2 years. Anyway, Joe came back, and he came up to Ontario, and he and his best friend, Robbie Rosenberger, also from Pittsburgh, were gonna show people, you know, they were gonna outfit and take people on canoe trips through Algonquin Park. You know, and they would pay something for, you know, to their guides. At the end of the summer, they made almost no money. It turns out that nobody wanted guided trips, you know, canoe trips in Algonquin Park. And he and Robbie were waiting for a bus to take them back to Pittsburgh. And Joe just happened to overhear a conversation that there were whitewater rapids on the Ottawa River. And Joe said, really? I never heard of that. Nobody had heard of it, really. So he said, Robbie, come on, let's go and have a look. Robbie said, no, let's just get on the bus and go back home. And Joe, being the kind of guy he is, said, no fucking way. We're going to go check this out. So he stood on the banks of the Ottawa River, and he sees, you know, thousands and thousands, tens of thousands of hectares of forest and whitewater, and nothing happening there. So the next year, he and Robbie came back. This time they came back with 2 whitewater rafts. Robbie would skipper one, and Joe would skipper the other. And they asked a farmer upstream if they could put in from their farm, and the farm downstream if they could take out. And lo and behold, 13,000 people came to visit them that summer and paid them $400 to go down the river.
Yeah.
So all of a sudden, Joe said, "Oh, I like this." And I asked Joe, I've known Joe for many decades. I said, Joe, what did you pay the farmers, you know, to let you?
Yeah.
He said, well, I gave them each a free ride and their families down the river. So Joe is like my father-in-law, Ken McMillan, and I suspect you're a lot like that too, Scott. Very careful with your money, conservative in a good way. And Joe was the same. And Joe said he has never, ever owed anyone any money ever.
Right.
If he wanted to buy a piece of land and he couldn't pay cash for it, he didn't buy it. He now owns 5,500 acres on both sides of the Ottawa River where Wilderness Tours operates, and he's trying to create a national park out of it. Yeah. He owns the Lachine jet boat business in Montreal. He runs the Niagara Gorge jet boat business. He has a whitewater rafting, I think, in the Potomac River in the States, and he's got one, I think, in Acapulco now as well. So, and it's worth a lot of money. But, you know, again, his business, you know, if you think about 13,000 people showing up and paying him $400 each, that's quite a bit of money, you know, as opposed to the summer before where and it's not a 6 or 7% cap rate. Right?
Yeah.
So that's,
yeah,
I'm not saying that it's a bad plan if you're making $13 million US a year to buy 60 small homes in your hometown in Florida or North South Carolina and rent them out. That's perfectly fine for those 2 NFL players. And it wouldn't be necessarily the wrong thing for you to do either if you want to retire. But we have to determine what it is that the strategy. So I'm not sure really what is the strategy, Scott.
The strategy is to get out of retail as quickly as possible and have a stream of income to last me until I die.
So how much could you sell your business for? Do you know?
Very little. It's an interesting business, Bruce, because you exit with your retained earnings and you get back the money you put into the business, which is basically nothing. It's 50K. You don't own your inventory, and you write off all of your assets, and then they turn around and sell to the next guy for 5 or 6 million, and he gets nothing for it when he moves on.
Wow.
Like when I opened in 2005, I got a loan with CIBC for around, I think, 6 or 7 million, and that was just for the inside of my store, for the equipment. One of these days, or I should send you my contract. It's interesting for you to take a peek at it.
I would, yeah, if you send it to me, I will look at it. That
Yeah.
is the worst franchise agreement I've ever heard of.
Yeah, it's obviously very slanted in the favor of Loblaw. Like they control virtually everything, and it used to be where you'd sign a 10-year deal, and at the end of your 10 years, you'd pull your retained earnings out. And for the longest time, franchisees complained about that because they wanted it to be treated as a business. If there was available funds, they wanted the ability to take them out. So they agreed to do that, but you'd have to leave half of your retained earnings in at the end of each year. So there was always cash there in case something were to happen, which to me makes sense. So you're only, the money you have each year is pulled and put into your holdco, and each year it's like hitting that. Like I said, I think when we first spoke before I joined as a client, I said, like, every year you get thrown a budget and you hope the budget's fair, and if you hit your budget and you basically hit a home run, you make a few bucks.
So how much is in the retained earnings now?
It's half of what I'm budgeted over a 5-year term. So I'm budgeted for 350 over 5. That's not necessarily what I'll make, because in the first 3 years of my deal, I've made just over 6. So, but I have to leave half. So say every year I'm budgeted to make 75K.
Mhm.
Every year I have to leave half of that in there. So there'd probably be maybe 100 in there at this point.
So if you were to sell the business tomorrow,
Yeah.
you would get the $100,000 plus another 50.
Yep. And to make it a little bit less uncertain, we would do an inventory, and if the inventory came back and it was short, they may decide to take those funds out of my retained. So I have a friend that just sold his store in Waterloo, and he was short 10,000 on his inventory, which is very little in the whole scheme of things.
That's actually
business.
pretty
good. And they did the right thing, which they don't always do. They wrote that off and didn't take it from them. But you run that risk too. So, but yeah, there's not a lot there.
That is the worst franchise agreement I think I've ever heard of. It's so lopsided, and that does not surprise me. I've had some dealings with Loblaw before,
Yeah.
which have not been very positive. I'll tell you that.
Yeah.
And they're very money focused. And they squeeze everybody. I had a deal to purchase a site downtown Ottawa for a new bank facility to be built for TD Canada Trust. I had bought the site, and Loblaw came along, and this is after I had a binding agreement of purchase and sale. They put in a higher offer, and then they hired some fancy pants lawyers in Toronto to try and attack our agreement of purchase and sale.
Right.
And finally, after fighting them for 2 years, and the sellers, well, I mean, it's ridiculous. They offered my company $100,000 to go away.
Right.
And we had to pay our own legal fees. And I said, I'm going to do this. But I said to it was like an executive vice president. I said, I could tell you that your behavior, in my opinion, on this file has been borderline criminal. And he had all kinds of excuses. I said, well, listen, you don't have to make any excuses because you've got your deal. You've basically stolen the land. You've kiboshed my company's investment here, and we get $100,000. I got $80,000 of legal fees. So thanks.
Yeah.
But it was not a good experience. And I've had other coaching clients who've also had dealings with them. There are not that many companies public companies in Canada that behave like that. Most of the public companies I've dealt with are very, very careful and very above board. But I think in this case, they knew that it was very unlikely that I was going to, go to the newspapers and make a fuss over it. I don't do that, right? Like if you and I ever had an argument, I wouldn't hire a lawyer. If I have an argument with my neighbor, I've had an argument with my neighbor here. I don't call the bylaw officer. I go and see him.
Yeah.
Say, hey, listen, we got to deal with this. He built we had a tornado rip through this neighborhood a few years ago, and a lot of houses were destroyed. My house was damaged, and he had a nice backyard, but everything was wrecked. And he decided to put a pool in, and he raised the grade of his backyard by 1 meter. And so I said to him, hey, you've raised the grade, of your backyard 1 meter to put in a pool. It's a nice pool, but I'm gonna have a pond on my backyard in the spring. And then he turned to me, he looked me straight in the eye, Scott, and he lied to me. He said, oh, no, I didn't change the grade. I said, oh, come on, I have pictures. Here's the grade before and here's the grade now. I mean, he said, well, that can't be right. He just lied to me. But I didn't call
privacy too, right?
Oh, well, 100%. His daughters have a trampoline there, and every time they do that, I have a 7-foot fence so that they can go over. I mean, it's ridiculous. I mean, he's really obnoxious. But I don't want to fight with my neighbors. I said, well, let's see what happens in the spring. Sure enough, in the spring, I got the Pacific Ocean in my backyard.
Yeah.
So I go and knock on the door. I said, come on over and have a look. And
I
said, well, that's pretty bad. I said, well, could you dig up along your property and put perforated pipe and just drain the storm water into the storm drain? I said, that'll probably help. And the next year it did help. And so he did that. So rather than call the bylaw officer, because if you have neighbors that hate you and you hate them, your house is no longer a sanctuary.
Yeah.
And one of you has to move. And I like this area, and I tolerate him, and I guess he tolerates me, but I don't call. I just deal with it myself. I don't call a lawyer. I don't call the bylaw officer. Right. Anyway, so we let's go back to where you're at. So I for some reason, I know you have told me this before, but I only really digested it today. That when you leave this business, you might pocket 150 grand.
Yeah,
that's terrible.
Yeah, so I got to make it every year, and to make it every year, like. I'm pretty I've been in the Loblaw business for 20 years, and I have a really good friend, colleague who owns a store in Peterborough. It's called Morello's Your Independent. He's on Lansdowne, and he's well respected. He talks to a lot of the operators, and I'm fairly certain that I'm amongst a small group who do well. A lot of them are happy because it is challenging. They're happy with the salary. They're happy bringing their wife into the business and them getting a good salary. They buy a lifestyle. They want to work 25 hours a week. I don't want to do that. So I've got to really kill it every year. And to kill it, it's about maybe 250. So, to do that every year, it's a grind.
It's now I understand it better. I'll tell you, one of my clients had 2 pods franchises. You know what pods are, right?
Yeah.
Portable on-demand storage. His pods franchise, he had one in Halifax and one in Ottawa. The one in Ottawa was either the most profitable or the second most profitable pods franchise. Canada or the United States, didn't matter. It was number one or number two every year.
Yeah.
And his name's Peter. He's a very good operator. He could operate the pods franchise and make really decent money, more than you're making, working 5 hours, maybe 6, 7, 8 hours a week.
Yeah.
I mean, he was a very good operator. Everything was just remote, it was like pushing buttons, and he had a great lifestyle.
Yeah. What
he didn't know, this is before he became a coaching client of mine, is when he bought the pods franchise, that the franchise agreements, they're written in legalese. He said pods had the right at any time to buy the franchise back. And so pods comes knocking on the door. Peter's built, in 10 years, he's built this incredible pods franchise that just makes a huge amount of money. It works maybe 8 hours a week, probably not even that much. And he's making, $500,000 a year for himself and his family. They say, great, we're going to buy it back. And in the pods agreement, it was a multiple of 2.5 times EBITDA, earnings before interest, taxes, depreciation, amortization. So it meant that he was entitled to, I think, 1.2 million. So better than your situation. You're going to get 150 grand, which is zero. And so but would you trade $500,000 a year and 5 to 8 hours of work a week? Would you trade that for $1.25 million? There's no way.
No.
So I started coaching Peter at that point, and I said, "Wow, this is kind of like the horses left the barn, right? We closed in the barn door after the horses had bolted." And I said, "I don't think there's much you can do. I mean, you don't want to, Pods is based in Texas. They've got lawyers on staff. If you sue them, you'll be tied up for 7 years and you'll never get anywhere."
Yeah.
So I think you take the money. And did I ever show you what he did with that? Did I ever show you just the spot?
No.
Let me show you what he decided to do, because this is another possibility for you. At least it's possible. So he bought this company, which used to be called Cosmic Storage, and I don't know if I can show. Let's see if I can. Maybe there'll be something here. Yeah, you get some pictures here. Yeah, I can find better pictures. Just give me a sec.
Yeah.
Yeah, there, here we go. So he bought this property. It was called Cosmic Storage, and it was actually one of my coaching clients quite a while ago now. His name is Larry. He actually did the first development, so it's about 20 acres in total. This is there's an office here, and there's actually an apartment on the top floor. This is where Larry lived up here, and he had an office here. And you can see there's the gate. And what you're seeing now is the site has been developed for contractor yards. So this is the fencing and the contractor yards are inside. This is a typical small contractor yard. I know it looks like a dump, but it makes a fortune. He's got acres and acres and acres of RV, boat equipment, and truck parking. You can see he's got some big companies here, some small companies here, different kinds of opportunities. But let me go back and explain what happened. So Larry Bravar, I helped Larry buy 13 acres of industrial land off of Barnsdale Road. So it's kind of south of Ottawa. And he built that house that I showed you, the office and the house above or apartment above, and he built a mini storage building, just one, and he had a little bit of parking around it. Larry was a different sort of guy. I loved him. He was a wonderful friend. He was a client, but he was also a good friend. We used to travel together, but he was what I would call a hungover hippie. He was, 50, he'll be 50 soon. And he had long hair down his back, and, he would sit around, smoke weed most of the day. But he was a lovely person. He really was. So he had this little business that made about $8,000 or $9,000 a month. He had no debt against it. Lived in the apartment upstairs. He had one little mini storage business building, and he had some parking spaces. But he had lots of land. But he just, he wanted to sit around, grow vegetables, and smoke weed. And, I'd go out and visit him. I wouldn't smoke weed with him, but I'd go visit with him, and we'd sit around, we'd chat, and we were friends. And we'd travel together too, with our families. Well, my family. And so Larry decided one day he didn't like the cold weather anymore. He went to Cuba, and he met a Cuban girl. Those Cuban girls are pretty. And he fell in love with her. And so about a year later, Larry calls me up and says, I want to sell, it was called Cosmic Storage. That's a perfect name for Larry, Cosmic, because he was like a cosmic guy, right? And I said, oh, I don't think you should. Because that was the time when I was really getting into the contractor yards model, right? Because I was helping one guy in Arizona, in Phoenix, Scottsdale, actually. He was doing contractor yards. He was the first. And I said, oh, no, Larry, don't sell this. We're going to do contractor yards and this. And he said, Bruce, I got a baby. I said, well, what do you mean you got a baby? You're 50. He said, well, I got this beautiful girl in Cuba, and I made her pregnant, and I'm going to go to Cuba. I'm going to get married, and we're going to raise our son together. You're going to Cuba? Yes. So I said, that's a communist country, Yeah, I know. So anyway, I didn't want him to sell it. I'm his friend as well as his coach and realtor too. But I said, if you're going to sell it, I'll sell it for you. So I sold it to Peter for $1.3 million. It was the deal of the century for Peter. He got 13 acres of industrial land. He got that office building and apartment above, and he got 4,000 or 5,000 square foot storage building, and he got 10 extra acres to expand. And I talked to Peter. I said, don't build any more, buildings. Just gravel the damn thing and endless amounts of RV parking, contractor yards, etc. So I sold Larry's house in Ottawa. I sold Larry's business in Ottawa, and I begged him not to take all of his money to Cuba. It's a communist country. If they want to take your money out of the bank, you'll never get it back. They'll steal it from you. So he listened. So he had about $2.5 million of cash after paying taxes, and he took about $1.5 or $1.25 million with him to Cuba, and he left the rest here in a bank in Ottawa, a couple banks. And he lived with his wife and his son. He started a new business in Cuba, which was quite successful. He imported, with permission from the government, 4 seagoing sea-doos. So you could go fishing. These are ocean-going sea-doos. They're not the little ones that you see on the lakes. These are actually, and he and his wife built this really nice place, and people would come and they would stay with them, and he would take them out deep sea fishing and whatever else. And you have to be licensed because, these sea-doos are certainly capable of running people out of the country, right? So they keep a pretty close eye on you.
Yeah.
And then another year or two goes by, and Larry calls me up. He has lung cancer. He's smoking weed like crazy, right? And he was into alternative medicine. So, he's going to go see a shaman, and the shaman was going to, do this and hopefully cure him. I said, Larry, that's fine. You should do the alternative medicine, the diet and all the rest. Nothing wrong with that, I suppose, but you should get proper treatment. You should come back. He said, no, I'll be right. I'm going to be fine. Within a few months, he was dead. And there's a big fight going on now because he died without a will. So he's got an ex-wife in Ottawa, 2 children who hated him. He's got the Cuban wife, and he's got the son now who's probably 9 or 10. It's a mess.
Yeah.
That's the bad news. The good news is that Peter bought this thing and he has cleared the entire site. He's gravelled it. He makes about $37,000 or $38,000 a month in gross operating income. After paying everything, including his mortgage, he's got about $22,000 a month in cash in his jeans, which is damn good.
I
And
love that because it's such a simple model. And you know what? The other thing too is
so simple.
the worst thing for me in retail is, well, there's two things: dealing with customers. There's not a lot of customers in that business. And the other thing too is staff.
What was the second thing?
Staff.
Staff. Yeah.
Yeah.
Those are two very tough things.
Yeah. Yeah.
So the reason I tell you this is that when his mortgage, because he has a mortgage on the property, when his mortgage is paid off, his net operating income will his cash in his jeans will be closer to $30,000 a month as opposed to 22. And he's close to paying off that mortgage. It's almost finished. And I asked Peter, I said, Peter, this is a fantastic story. You know, why don't you do another one? And he said, Bruce, he's now got this business so that he's working like 5 or 6 hours a week on this thing too. He's a fantastic operator, much better than I've ever been, but he's really, really good.
Yeah.
And he said, Bruce, I'm perfectly happy. He's your age. He's actually 50, and he doesn't want another one. He said, I can live on $30,000 a month for the rest of my life. I'm an adventurer. He loves to go do adventure travel. You know, he'll do a race in the middle of winter across the top of Norway. You know, like you have like a snowboard and you have a sail, and it's -20. You know, -30. But you know that would be my cup of tea. But you know, he loves doing stuff like that. You know, 2 weeks ago he was in Cabo, you know, kite surfing off of in Mexico, off of the Baja Peninsula. So he's the first person I've ever dealt with out of the 2,500 or so people who've gone through my coaching practices. I'm good. I don't want another one. I don't want any more complexity in my life. And by the way, the first guy who did it, Kyle Powell in Phoenix, in Scottsdale, he has 3 contractor yards. He makes about $40,000 a month. And he said exactly the same thing to me. He's a bit older. He's in his 60s. And he said, I'm good, Bruce.
Yeah.
Good. I don't want any more. I make money. And again, he has this in Arizona, they view their summer the way we view our winter, right? It's too hot. So he goes to Minnesota. He likes fishing and hunting, and he goes to Minnesota for the summer because it's much cooler in Minnesota than it is in Arizona.
Yeah.
And you know, he can leave the business for 3 months, and he looks at his phone once a day. That's it. So the reason I tell you that is that industrial model that I was talking about, the workshop model, and the contractor yards model, they're actually one and the same thing.
Yeah.
Right? I think I showed you a workshop that I just bought, you know, for one of my projects. I think I showed you that.
I think so. I mean, you've shown me a few. You showed me the one that you built on that piece of property you built on the outskirts of Ottawa, where you have the apartment and then you built the garage there.
Yeah, but I'll show you, you know, one more just so you can get a sense of it.
I like that story too, Bruce, because it's got whether it was intentional or not. I like the whole pay it forward piece, maybe because that's what I'm hoping someone does for me. I like the fact that there was still meat on the bone for the client who purchased it. So,
well, you know, now that you mention it, I'll be honest with you. I miss Larry, you know, a lot. I think about him a lot, and he was a dear person. He was a good person, you know, and I miss him, you know, really I do, because you know it's getting a little warmer. I would go out and I'd sit on his porch there. We'd wave to people coming in, you know, going out as clients, customers, and we just chat. You know, you know, I don't have much free time because I have to work for a living, but such as I did, I would visit him, you know, twice a year, and he would always send me away with, you know, fruit. You know, he'd grow giant watermelons and beautiful tomatoes and peppers and stuff like that. So I'd always come back with like bucket loads of stuff. And he's just a wonderful person, you know. So now that I think this is the first time I thought about that, Scott, is that I'm actually glad that we sold it to Peter when we did, because he was able to go and live with that pretty girl, you know, and his son, and have a decent, you know, 8 or 9 years with her.
Yeah. Yeah.
And what the hell is the money gonna, you know, just so you know, Peter's company now, he's had an offer to purchase it for $9.5 million.
Right.
That's a lot of money. And you know, you're saying this is a unicorn, but you know, when I keep seeing these stories over and over again, and I've been involved in a lot of them, you know, in the States and in Canada, I think you can, if you wanted to, and you put the time and effort into it and didn't get discouraged, I think you could do it too.
I don't know if I have the ingenuity to do stuff like this, the creativity.
That is a great question. Do you have enough ingenuity to do it?
Yeah.
Do you?
I don't know if I do. I'm a pretty simple guy. I mean, I've figured out the grocery business fairly well. I mean, there's opportunities for sure. I'm a systems guy. I love automation. You know, just give me the playbook and I'm happy to run with it. But I guess
But why
I
couldn't
would like to be challenged.
why couldn't you buy an existing you know, mini storage business and do what Peter did with just the spot?
Oh, I think I could do that. That's I don't for sure. No, I don't know. I think I could do it.
I
For
think
sure.
you can too. I know you're very conservative and cautious, but also you're very self-deprecating. You know, you know, you're very modest. And that is a great thing in many ways. But I I don't think there's anything that Peter's doing that Scott can't do.
Right.
I don't think so. You know, Peter's he's an engineer and he's very organized, and you know, like on just the spot, you can go on his website, and you know, it's not that complicated to do these days, and you could lease a parking space for your RV or your truck or your bus, right? And and you put a credit card in there, and you know, the system just takes care of it, right? And then you
Yeah.
get a code, and you put the code in the gate, and you go and you find your spot and you park there. You know, Peter doesn't have anything to do with that, right? It just
Great model.
it's you know, it's not that simple. Okay, I'm sure that Peter has, you know, figured out some things that I don't know, because I run a small business like that, but nowhere near at that level, right? I wish I did. But let me show you what I think the modern model actually looks like today. So, and I've talked to Peter about this, and he might do it. I don't know if he will or not, but what I think, if you were to do it, just bear with me if I can get this thing going here. Yeah, is, and I may have shown you this, but what I would do today, and what I want Peter to do, because he's bought another 6 acres right next to it, is I buy these little workshops, and I've showed them to you before. I think you may have seen this one.
Yeah.
So that's 160 square feet. It has an overhead door, obviously. It has a man door and a window. It's got a metal roof. It's 2x6 construction. It'll last at least 40 years. It sits on a gravel pad on runners. It has electricity, lighting, um, uh, heating. And to my way of thinking, this is the model for contractor yards going forward, that you're going to rent a yard, and that's fine. If you just want the yard, you're parking your equipment in it, fine. But a lot of these people, I think, want the yard today, but they also want the little workshop, right? It's heated, whatever else, and cooled. And, you know, so there's the workshop again. There's a little house here. The young woman that I rent to, she lives there and works there. And this is her workshop inside. You can see that these rails are, you know, for the overhead door to open up. These are LED lights here. That's the reverse cycle heat pump, right? It gives you heat in the winter and cooling in the summer. We put in the flooring here. I guess that's cushion flooring. or laminate flooring. Then we've got the electrical obviously is behind the drywall. We've got spray foam insulation. So we've got probably R25 in the walls and in the ceilings, maybe a little bit more than that. That's just looking out the window. But, you know, this little workshop, by the time you put the gravel pad in and you do all the other stuff that I talked about, it's about a $28,000 cost. And that one rents out for $700 a month plus HST, plus a little bit for power. So the cap rate on that, 700 times 12 times 0.66 divided by about $28,000 is about 15 to 16%.
It's so tempting. You just want to go out and buy a couple of houses and just throw these in the backyards. And
Well, that's what we're doing with our portfolio. You know, like I have to recover still. I'm still in the recovery process from the bankruptcy of the Sens. And you know, and again, as we talked about an hour ago now, I can't do anything really. 11 or 12% would be the minimum cap rate for somebody my age. And you know, if you can on these little workshops, you know, I get 14, 15, 16%. Some of them maybe a little bit more. But that's the only way that I can, you know, because you know, I intend to coach as long as my brain holds out, you know, and as long as people want me to coach them. But at some point, you know, being 72, people might say, well, you know, Firestone's too old. You know, I hope that won't be the case for a while, but it's possible. You know, there's a thing called ageism, right? Where
yeah,
people think that, you know, once you're over 70 or certainly over 80, you're too old to do anything useful, which I think is wrong. You know, I have a client in his 90s still doing deals. I mean, he's a brilliant businessman. Now he doesn't do a whole lot of running around anymore, but he's still, all his marbles are there, and he's very sharp. So I
probably
think
why he's
that,
still alive.
beg your pardon?
That's probably why he's still alive and doing well.
100%. And even if you, and I've talked to Peter about this too, even if you are able to get to the point where you have a model where you're working 5, 6, 7, 8 hours a week, the rest of the time you should not sit around drinking, you know, alcohol. You know, you will end up.
No. I laugh because um, you have to stay active, and I laugh because it you know, I do enjoy having a cold beer.
Yeah,
And
yeah, me too.
so I mean, but you got to keep going. You got to stay motivated and active, and yeah, it's not easy to fall into those traps, or it's not hard.
Unfortunately, many of my friends who are retiring, you know, from government or
Yeah.
corporate jobs, they are not staying active. And when I see them after a couple of years, I'm shocked. First of all, they put on a lot of weight, many of them.
Yeah.
Second of all, they're really sitting around watching TV pretty much all day, every day. And their bodies and their minds are going to rot, and that's not good.
Yeah.
My dad, before he passed away, said men should never retire. You change what you do.
Yeah.
Like I'm now doing mostly coaching, and I like doing it, and I think I'm pretty good at it. But you know, it gets me up every day and keeps me. You know, I do lots of research and writing, and I think that's very important for men. My wife, you know, we have 5 children and a bunch of grandchildren, and you know, she's involved with her church group, and she's involved with her children, her grandchildren. She takes care of her husband, and she has lots and lots of you know, outlets. But for men, they generally tend to have one, and that's their work.
Yeah.
So
Yeah.
you have to keep busy. I mean, whatever you do, right? You have to find something. So what I was hoping, you know, to get out of today, I don't know if we've done it, but what I was hoping is that you know, you would be inspired to look for properties that are a little bit different. You know, now if you're not comfortable doing it, don't. But I think you should, you know, you should go down 2 tracks, in my opinion. One would be, let's see if we can find, you know, something in Peterborough or Port Hope that, you know, has a 7% cap rate, and you know, you're comfortable with it. That's fine. But the other is to look for something, you know, mini storage, contractor yards, the micro workshop model. That's all one. You understand, that is one
Yeah.
model. I mean, I'm sure I'm going to convince Peter and Chris Long and Chris O'Connell and the others, you know, Ryan Hughes that I coach in the States to add the workshops to their contractor yards model and to their storage. And I got you, Ruben, and his wife, Mary Lou, that I coach. I got a whole bunch of people in this industry, all across Canada, all across the United States. And I would say that we are probably at least 5 years ahead of anybody else in this business, because we've been at it for a long time and we're pushing the envelope. So if you had some mini storage and you had some you know, some of these workshops and these contractor yards, and there's other things that go with it. You know, it's a really strong model. And you know, if I were was a bit younger, I would definitely, this would be the one model that I would certainly focus on. And I've done a little bit of it on my own just because I have some property where it makes sense.
Right.
But I don't have a property, you know, that's now 20 acres like just the spot, like Peter has, where you can do it on a big scale. I've got, I just do it on a small scale, which probably is okay anyway.
Right.
Let me show you one last thing before, I'll show you two more things before we finish. So this is, you know, you mentioned trying it. So this is one of the properties that my wife and I own. And we had this big shop in the back, which we weren't sure what to do with for a long time. And this was there when we bought the property. And you probably are aware that you could ask Jeff Moody to set you up on an automatic search in Port Hope and in Peterborough, where he could have the MLS system spit out to you properties which have detached garages.
Yep.
That's what we did to find this thing. Okay.
That's a nice garage.
Oh, it's beautiful. And it's big. It's you know, it's close to 800 square feet.
Yep.
So we had a young woman, just a beautiful young woman, a yoga instructor, come and wanted to rent one of the apartments. So we have a triplex in front, and then we had this monster thing in the back. And she wanted to rent a triplex, and she has one child, and the husband is long gone. And she wanted to rent it, and she makes about $38,000 a year as a yoga instructor. The apartment was $2,000 a month. I said to her, "Maya, you can't afford the apartment. You've got a kid, right? You've got to, you know, take care of the kid. You got to buy food. I mean, you know, there's no way." And she said, "Well, you know, my parents are helping a little bit." And I said, "I understand, but I don't think so." And then I took her in the backyard and I said, "I have an idea. What if you were to run your own yoga studio? Maybe you could do better running your own studio in the neighborhood." And in most jurisdictions in Canada, the United States now, it's legal to have a home-based business. So if you have the apartment here, or the house here, and the workshop in the backyard, it's legal. You have a home-based business. And I said, "Could you start your own studio?" And she said, "I don't know." I said, "Well, maybe you could." So anyway, I rented the backyard studio to her for very little money. Like, I'm a sucker for a pretty girl, and I said, "Okay, $800 a month. You know, it's half of what I could have gotten for it." But I said, "I want percentage revenue." She said, "What's that?" I said, "Well, if you're successful, I would like to get 8%. So I'm not getting much on the rent, but if you're successful, I'll make some money on the percentage rent." She said, "Fine." And I said, "It's commercial lease." And I think I've talked to you about this before. I rented that workshop to her, and she ended up with an accessory residential use. So her main lease was commercial with accessory residential, and she's not covered by the Residential Tenancy Act.
Yeah.
You remember that? So
Yep.
I said, "Maya, if you don't pay your rent, both for the workshop and the apartment, I can kick you out," and I will. You know, this is not pro bono. This is, I want you to be successful. Anyway, she made, in her second year, I think she made $120,000 from her yoga studio. And last year, I haven't got the full numbers yet, but I think she made $135,000, which is a big change from 38 grand.
Good for her. That's a good lifestyle change too.
Huge, and she's super happy, and she's a lovely person. And I'm doing good. You know, like I an extra $9,000 last year, and probably a little bit more this year.
Yeah.
So I'm getting, I'm getting a decent return on that building. But I think that model is very strong. And I think Maya might be there for another decade,
Yeah.
So it's a good model. And the last one, I don't know if I showed you this one, and if I have, you're gonna have to tell me. But this will be the last one I wanted to show you today. Something else when you do your site search is you might look for something a little bit unconventional, but similar in what's possible. This is a property in Moose Creek, Ontario. It's a small town, very small town, maybe 800 people. I don't know. Did I show you this?
Yeah.
I'll tell you something. There's got to be places near Peterborough and Port Hope where you can buy something like this. This is 44 acres of farmland. It has the barn here. It has the house and the workshop there. It has two giant workshops here. It has a beautiful 15-acre farm field here. I mean, my client bought this thing for $960,000. Right? You'll see, I'll just remind you, and we're recording it, so it'll go on there. These things are fantastic. Look at the size of these. What would it cost to acquire 44 acres and build all this stuff? A lot more than 960 grand, I think.
Yeah. Yeah,
Look
those
at
are nice buildings too.
They're fantastic. Well, they're now used for small workshops, and they're also, one of them is used for cannabis growing, legal cannabis growing. There's the house and the workshop next to it, a detached garage. That's the approach. You've seen it before.
Yeah.
Just another shot of this, another shot of that. There's this is my young client who bought it. His name's Alex, great guy. You just see again more pictures. More pictures. That's Alex going into the house. Again, more workshops. And I don't know if you remember this part of the model.
Yeah.
I call that the white picket fence. And Alex has now got the 14 acres, and I don't know how many of these little bunkies he's got on there, and the little garden plots, but he's doing very well with it. So even agricultural land can have aspects of the storage, the workshop, and there's even things you can do with that. So I think, just because I think you should expand your horizon, I think you should be looking for houses that you can buy in Peterborough and Port Hope, which have detached garages.
Mm-hmm.
And Jeff can set you up on that. And then he could also set you up on a search for farms and any commercial property, like many storage facilities that are for sale.
Okay, well, I can set that up today with Jeff.
I think you should. And again, one of my clients bought a mini storage place in Wainwright, Alberta, which is a town of maybe 2,000 souls. And with the contractor yards model and the workshop model and the mini storage model, that little thing in Wainwright, which is, the middle of nowhere, friggin' Alberta, I never heard of Wainwright, has turned into a little gold mine for my client. And it's just a terrific little operation, but they exist out there, and this was a client of mine. He's based in North Vancouver. His name's Ruben, and his wife Mary Lou. They bought Wainwright, Alberta, and they bought another one here in Ontario, which I helped them purchase. Which was these are unbelievable deals, and we started by calling them unicorns, but if there's a whole herd of unicorns, they stop being unicorns.
True.
So look at the farms, the smaller farms. Look at the mini storage businesses for sale. Look for homes that have detached garages, and you're looking for a detached garage it could be a giant building. You could end up with a small house, and like look at those buildings at Moose Creek. I don't know, they're like 8,000, 12,000 square feet.
Yeah.
I mean, that house, you saw the house is I think it's a 2-bedroom. It's a pimple, But
Yeah.
the buildings are like, I think the two main buildings are just by themselves are over 20,000 square feet.
Yeah.
So I do think we can broaden our reach. Okay, Scott?
Yeah, for sure. Yeah, I'm not intimidated by that or opposed to looking at those two models. So that's
And,
good.
I am absolutely sure, I know you're not sure, but I am sure that you would be an excellent operator. I'm
Yeah.
sure of it. If you can run a grocery store, think about the amount of staff you need to run your grocery store. How many staff do you have?
And about 160.
How many do you think Peter has?
Handful.
Zero.
Zero? Okay.
Zero. I mean, he has a couple of handymen on call, right? If there's
Yeah.
something breaks down. So he could be in Norway doing that crazy race across the top of Norway in the middle of winter. And if he gets cell phone reception, he can fix something by having one of his handymen. They charge him $45 an hour and they go fix stuff.
Yeah.
Yeah. Now, he does have one of his clients at Just the Spot has a contractor yard and has an office in that little house that I showed you. And he pays, that guy pays, I think, $4,000 a month for his yard and his office. And Peter gives him back, I think, $1,000 a month or $800 a month to be his on-site eyes and ears.
Right.
So it isn't, so he doesn't have any staff, but he does have some people that are on site that in case something goes wrong.
Right.
All right.
Makes sense.
There's no reason, Scott, that you couldn't do it. You certainly don't need 160 staff to operate Just the Spot.
No, for sure.
All right. So I've got this recorded. I'll put it on YouTube unlisted. It'll be on your email at some point this afternoon.
All right.
All right. And I expect to hear from you soon.
All right. Take care, Bruce.
You
Have a
too.
good day.
You too.
Okay.